Welcome to another episode of Straight Talk on Stocks with Kevin Hurley, managing partner of Hurley Investments LLC, and Jeffrey Dunyan, CEO and owner of Safe Option Strategies. We are just a couple of guys that like to shoot straight with you and tell you about what's going on in the market, why it's going on, and most importantly, what you need to do about it. Straight Talk on Stocks likes to mix in a little bit of politics. We occasionally mix in a little bit of sports, and sometimes we just like to tell you what people are doing that really ticks us off. Thanks for joining us for another episode of Straight Talk on Stocks. To another episode of, you heard that in the introduction, Straight Talk on Stocks. I'm Jeffrey Dunyan. I'm solo today. I don't have Kevin Hurley with me. I usually have Kevin here with me, and when Kevin's not here, I try to get somebody else. But I got nobody today. You have to listen to me and nobody else. So this probably won't be a 30, 40-minute podcast because I can only talk for so long. So I hope everybody's doing good today. It's the market's been open as I'm doing this presentation. Market's been open for a little over 2 hours, and the Dow was down to start the day, and it's actually in positive territory now. Dow got down as much as 150 points, and now it's in positive territory. I wanted to comment a little bit on that because I'll tell you, people overlook the importance of market sentiment. And here's what I mean by that. During this time period right here, so we've got basically the starting part of October to, the weekend between Christmas and New Year. We had that horrible Christmas Eve sell-off, and then we had the huge move to the upside in between Christmas and New Year. There's that one day the Dow Jones was up over 1,000 points during the trading day. And we've had days where the intraday movement has been over 1,000 points, but it's a rare thing to see the markets go up. The Dow Jones go up 1,000 points in one day. That just doesn't happen very often. So we have that going on. And what happened here in large part is that every time there was a little bit of movement to the upside. I mean, this is really, that's a nice looking move, but that's about a week and a half. And then all of a sudden for 2 weeks after that, 3 weeks after that, it's down. That's a nice move. That's 1 week. And all of a sudden we had this horrible sell-off. And on a lot of these individual trading days, what you had happening was people selling the rally. I can't, if you paid attention to the market during this stretch, how many times did you see, and I'm going to make this to where we can zoom in on it a little bit better. Let me get all my drawings out of the way. How many times did we see the markets have a strong move to the upside only to sell off by the end of the day, or sell off, have an exaggerated sell off at the close of the day? Hopefully those OHLC bars are such that you can see them a little bit better now. This is what I'm talking about right here. A lot of these days, look at how high the market was at one point. This was a negative day all the way through, start to finish. The Dow started to the downside, might have got to break even at one point in time, finished way down. Same here, but look at this day. The Dow started flat. There was a move to the upside at some point in time during the day. By the end of the day, it sold off. Even on some of these up days, even on some of these days where things finished up, you see we're a ways away from where the top of the market was on that given day. And a lot of these down days, the right hash, the closing mark, that little right hash is the closing mark. It's down towards the lowest point of trading on the day. That's a sell the rally. That's a sell off to the close. A lot of times, if you watch the market and you're going into that closing 30 minutes of the market, you see the biggest sell off of the day come in that last 30 to 40 minutes that the market is open. And that's frustrating. That's people who don't believe whatever has happened during the day, good or bad. Here's a great example of a day that spent most of the day up, sold off at the close, and finished in negative territory. And what that tells you is that most people that are actively involved during that day, there might be a lot of people sitting on the sidelines, but the ones that are actively involved that day They don't have faith in the market. They don't believe the market is going to go up the next day. They don't believe they can stay in a position and get through to the next trading day and still have it be a good situation. So you continually see this sell to the close and this sell the rally. This past 2 weeks, 2.5 weeks now, maybe, holiday shortened week and then a full week is where we're almost at. This has been the opposite. A lot of these closes are right at the highest point the market has been at during the day, and that is a rally to the close. That's buying the dip. Market sentiment is what's really driving things right now. And the more you get the negative media stories, the more you get the negative headlines, the more people are going to overreact to some of the more directly financial related information. Let me give you a good example of this. We had this mass sell-off, 4 days in a row, 4 of the worst days in a row that the U.S. stock markets have had in the history of the markets. You had this horrible sell-off. What did it start with? Jay Powell came out and said, we're going to hike rates and we're going to continue to clear the balance sheet as quickly as we can. Now, all of that was expected. The one part that might not have been expected in that was the comment that Powell made about the balance sheet. I'm going to come back to that. I was going to say, let me talk about that for a minute, but let me come back. I want to sit back in my chair. So I'm going to try not to cover my face, but I'm going to bring my microphone. See, now I'm all casual sitting back in my chair, but you can still hear me good. Bring this microphone right out. Try and do it without, not that you necessarily want to see my face, but I'll try not to block my face if at all possible. There you go. Got to move this way a little bit. All right. So let me finish. Powell comes out and does exactly what we thought he was going to do. Everybody since October, when he made some idiotic comments about how they need to continue to tighten things faster and stay ahead of inflation or match inflation, that helped perpetuate a bad October. November, I think, was a little bit of an anomaly. You just had people that were scared. October was so bad, and we had so many months in a row prior to that where things had been so good, with maybe February and March being the exception. You had go back to election night of 2016, and you had all the way from 2016 to 2018 with one little blip. And that little blip was a bad February, March. Things started to get better in April, got a little shaky through April and May. And by June, we're back off to the races. So you had one quarter in 8 that was not a stellar market performance. And I think October really spooked people. And I think Powell's comments exacerbated Powell's comments triggered the October sell-off. But what exacerbated it, what caused it to be worse than it should have been, was all of the negative headlines that continued to drive it. There was nothing going on with China that hasn't been going on with China for decades, except for trade tariffs. There was no evidence yet that trade tariffs were hurting anybody, really, except the Chinese, primarily the Chinese, I should say. But the media continually reported that these trade talks were going to kill us. They were going to kill the economy. They were going to kill the U.S. markets. And they did. It was a self-fulfilling prophecy. It killed the markets because people kept saying it was going to kill the markets. Fundamentally, nothing had changed. There wasn't a change fundamentally in what was going on in the economy. Unemployment was still low. Wages were still going up. Companies were still making profit. It wasn't as much profit as they had made the quarter before or the same quarter the previous year. But you can't get a repeat of 2017 every single year. You can't get, when you get a big, huge bump from massive corporate tax decreases, you get the wave, you get the big bump, and then things settle. But if things are still going in an upward direction, that's still good. But the news loves to perpetuate negativity. They love to say, oh, the economy is slowing. And it's like Chicken Little saying the sky is falling. Well, the sky is not falling. The economy, the rate of growth is slowing down, but the economy is not contracting. I can't believe how many people I heard last quarter talk about a possible recession. There's no evidence of a recession. There is no valid, viable, legitimate evidence that a recession is on the way. Our economy's growth rate has slowed down a little bit because of rising interest rates and because of slumping oil prices. Now for the consumer at the pump, those oil prices dropping appear to be a really good thing. And I know when I go, I've got a full-size F-150 pickup truck. It's a gas hog. I got the big V8 engine in it. Screw that little wimpy EcoBoost 6-cylinder engine. I want the power of my big V8 engine, and that thing sucks gasoline like crazy. And I don't care. I'm not ashamed to have it and to drive it and to have it consume the gas. But I love when gasoline is down around 250 instead of 350 or higher. I absolutely love that. So, it's good for my wallet, but it's not always a good thing for the broader economy, because those energy companies that take a hit, they employ a lot of people. They have a lot of shareholders. They got to be profitable to keep 401ks profitable, to keep their employees happy, to keep from having layoffs. So even though we like the oil prices as far as the price of gas at the pump, you see declining oil prices, you're going to see the market come down with it because it has that kind of a drag on the market. So, there's some good and bad that go with that, but rising interest rates and dropping oil prices help drive the market down. But that's it. The main underlying fundamentals of the market, corporate profits, people's income going up, unemployment, it's all still in great shape. A large part of this move was unjustified, but was perpetuated and exaggerated by the media. You finally have sentiment changing, and you finally have people that are figuring out that all these headlines don't mean a lot as far as what's going on. And they're not meaningless. I don't mean to imply or suggest that they're meaningless, but they don't mean a lot. And they can be overcome. And we're still the envy of every country out there with our economy. I had a conversation with my almost 16-year-old son. My youngest one is 16. I had a conversation with him yesterday. He goes to a private school, so we take him and we pick him up. There's no busing there. But had a conversation with him on the drive home from school yesterday. It was a great conversation. I was listening to one of my favorite programs after the market closes. I like to listen to I think it's called After the Closing Bell or the Closing Bell. It's got Melissa Francis and what's his name? They just changed the main anchor has his own show now. David Asman, I think. I'm sorry. I remember Melissa Francis because look, Melissa Francis was on Little House on the Prairie years ago, and she is sharp. She is smart. I like listening to her. Anyway, sorry, Melissa. I'm not remembering who your newer co-host is, but I like the program. I love listening to the program. So I'm listening to the program, and my son is listening, and I don't even remember what was talked about or what was stated, but I had a good discussion with him about the economy, just on a very broad spectrum. We talked a little bit about unemployment and how important that is. We talked about wages going up and how important that is. And we had a chance, and he asked some really good questions. He's a bright kid. My son is so smart. He asked some questions about, well, Dad, why do I hear this? And why do I hear this? And why do I hear this? And one thing he brought up, because he's got a teacher who says that unemployment was at record lows all through the Obama administration, and what's going on now is just being exaggerated by Donald Trump. All right, I'm not going to get into the politics of Barack Obama versus Donald Trump. I'm not going to get into the personal bashing. I will tell you this, and you'll know from what I'm about to say, as much as you need to know or want to know about my personal politics. But I was frustrated continually, and it really upset me all through the Obama administration when unemployment numbers were touted and how great the unemployment numbers were, because what was missed in the conversation was labor participation. And the prior administration conveniently left out labor participation rates. And I think we talked about this in another podcast, so I'm not going to go into a lot of detail on this, but for those of you that may not know, if you're not, if if you've just never been taught this exact correlation or how this correlation works. When a person loses their job and goes on unemployment, they are now counted as part of the unemployment rate. Those numbers come from the number of people that are filing unemployment claims. So you get your new unemployment numbers, the people that are filing for the first time, and you get your continued unemployment numbers, the people that continue to file. When an individual runs out of unemployment, and it can be anywhere from 6 to 9 to 12 to 18 months. I think 6 months is standard that you can collect unemployment. And listen, folks, I have no problem with people collecting unemployment. I got laid off from a company when my wife was pregnant with our third child. A company that I was working for closed its doors. Just one day we showed up and the company said, "We're really sorry, we've run out of money." Now, us little peons in the company, because that's what I was at the time. It's a lot different owning your own company. Believe me, it's a lot better. But at the time, us little peons were just, there might have been people in middle management and upper management that knew that it was coming, but I didn't know it was coming. I was shocked. I had 2 kids. I had my third one on the way. My wife was working part-time, but the hours weren't there for her to go back to work full-time, at least not right then. And we were a younger couple. We didn't have a lot of money saved. We didn't have a lot of people we could turn to. I went on unemployment. I was grateful that it was there. I don't mind when I pay taxes that some of my money goes to the government for purposes of unemployment. So I'm not ripping on unemployment. I do think there are abuses in the system, but that's a conversation for another time. When you run out of unemployment, if you extend once, if you extend twice, whatever the case may be, when it eventually runs out and you're still not employed, guess what? You no longer count as part of the unemployment. So you can have a lot of people that are still without work, but they're no longer counted in the numbers of the unemployed. If you factor in labor participation, you get a better look at how many people are working who want to be working. And during the Obama administration, we reached record low, not all-time record, but for decades. We're talking going back to World War II. You had the lowest labor participation rates going back multiple decades, going back prior to my life starting on this earth. And that is so misleading when you brag about great unemployment. Look at our low unemployment numbers. Well, yeah, because they no longer count, but they're still not employed. They're still not working. It was so dishonest. It was so intellectually dishonest to know that was the case, and to go, whatever member of the administration would go out and brag about these great unemployment. And Obama hasn't been president now for 2 years, and still every now and then he gets in front of an audience, usually a foreign audience, because he's too cowardly to say it in front of a U.S. audience, but or at least not a U.S. college audience. But he gets out there and he says, "We had record low unemployment during my administration. Thank you, Obama." And he thanks himself in the third person. The arrogance of that man is staggering to me. It still is. Anyway, and I'm not saying Trump is not an arrogant person. I don't know that you can achieve a high-ranking political position without a level of arrogance. So I'm not saying Obama is arrogant and Trump is not arrogant. But believe it or not, Trump isn't as subtle in his arrogance. Trump is more flamboyant in his arrogance. Trump is more brass and in your face in his arrogance. But don't ever mistake that for less arrogance. He is in no way, shape, or form less arrogant than Barack Obama is. Anyway, I'm off on a tangent. It frustrated me the way the previous administration did that and the way the media supported them in doing that. Now, fast forward to the beginning of 2019, end of 2018. Now you've got record low unemployment, which if you still had massively low labor participation, I would say the exact same thing about the unemployment numbers that are being reported right now. All-time low unemployment in the Hispanic community, record low unemployment in the African American community, record low unemployment, not all-time record, but some of the lowest rates of unemployment overall in the country that we have seen, certainly that I have seen in my lifetime. And now you've got labor participation back up to it's not all the way back to where it was, but it's dramatically back up. It is way, way back up. Okay. That's numbers you can tout with some legitimacy and without being intellectually dishonest. So the point I'm making with all this, I know I went on a big rant, and I'll wrap up here in a minute. I know I went on a big rant, but the reality is the underlying fundamentals of this market are solid and sound, even in spite of a trade war. I'm not saying a prolonged trade war would not be damaging. I'm not stupid enough to think that's the case. I'm not saying that if we don't reach some kind of a deal with China, that couldn't potentially hurt our economy. I know those things are out there and they're looming and they could happen, but I believe a deal will get done. I believe unemployment is going to continue to stay low because, look, for all the talk about the tax increases not really having a dramatic effect on things, bullcrap. Companies are able to hire more people when they're paying lower taxes, when they don't have to pay ridiculous, stupid, crazy Obamacare rates, and when they don't have to pay over-the-top taxes and be the highest tax rate of any free capital industrial country in the world. When they don't have to do that, they can hire more people. That is good for the economy. That is good underlying fundamentals in the economy. So look, I'm gonna wrap up in just a second here. I know I've gotten a little political, but here's the thing. I think there's going to be at least a partial stall of this rally when we get right up around this 24,500 mark. That's not a very good horizontal line I'm drawing on there, but right around this 24,500 mark, I think you're going to see a pause. If we get some news that will push us up through this point, we're going to go back up and test all-time highs again, and we're going to do it within the next quarter or two. I would tell all of my listeners, I would tell my students for Safe Option Strategies, I would tell my listeners for this podcast, I think the time is right to be bullish in the market. I would be cautiously bullish. I would use spread trades. I would use collar trades. I would hedge my positions, but I would slant them towards bullish movements. We could get another dip and have a double bottom right here. I don't think it'll be as sharp a drop as we had right here. If we get another dip and get a double bottom, I think it's going to be more on a trajectory like that. I think it'll take us 2 or 3 weeks of some gradual downward movement, not this 1 week of super sharp sell-off. But on any given day, any headline can drive things the other way. So thanks again for joining the program. Sorry Kevin wasn't here. Kevin's up enjoying a day of skiing with his family. I'm jealous. One of us had to stay and do the work and do the heavy lifting, so it was me today. But Kevin's up having a great time with his family. If you're a snow skier, and let me give you, okay, if you don't snow ski, log off. This isn't for you. I'm done. If you snow ski, I'm going to tell you a couple of well-kept secrets, and I'm going to tick off some Utah residents when they find out that I'm giving away a couple of secrets. A lot of people know about Park City, Utah, and a lot of people know about Deer Valley, Utah. Jimmy Fallon posted some Instagram pictures with his family skiing in Deer Valley a couple of weeks ago over the Christmas holiday. They are fantastic ski resorts. They are phenomenal ski resorts. Park City is where a lot of the Sundance Film Festival is done in Park City. And then you've got Sundance Ski Resort that's a little bit south of there that's owned by Robert Redford. That's a much smaller ski resort. So a few rich people go there, but it's not as busy. Even during its busy days, it's not as busy as places like Park City and Deer Valley can get. Write these down: Alta, Snowbird, Solitude, Brighton, Snow Basin, Powder Mountain, Sundance. All of these places are 10 times the amount of skiable acreage of anything you will find out in the eastern United States. I'm not picking on the East Coast, but my daughter moved out there recently. She's gone to a couple of ski resorts out on the East Coast. They suck. Okay, by comparison. If it's what you have and it's what's available, go have a good time. A bad day of skiing is better than not skiing at all. But by comparison to what we have here in Utah, they suck. Now, if you go to Brighton, if you go to Solitude, if you go to Alta, if you go to Snowbird, all four of those big, beautiful major ski resorts are like 25 or 30 minutes from downtown Salt Lake. They're 15 minutes from what we refer to as the East Bench of Salt Lake. You have a multitude of hotels, you have VRBOs, you have some bed and breakfasts there. You don't have to go and spend a fortune in Park City or Deer Valley. Because I love those ski resorts. They're beautiful, but they cost, it's 3 times as much to go stay there and ski there as what you can ski for a day at Solitude or what you can ski for a day at Altus. So if you love snow skiing and you want the experience and you don't want to spend a fortune, I'm not saying it's not still expensive, but if you don't want to spend a fortune, come out and join us and enjoy the greatest snow on earth. It's here in Utah, people. The greatest snow on earth exists here in the state of Utah. That's why it's on our license plate, so you know it's true. All right. Have a great day. Hope the markets stay bullish. Bye-bye.